Hello, and thank you for your interest in advanced allocations for Dynamics GP. The purpose of this video is to provide a detailed demonstration of the product. If you'd like to see an overview instead, please use the link below. And our agenda is as follows. First, we're going to go through some definitions and get clear on some terminology. Then we'll look at features and differentiators of our product versus standard GP. And then we'll launch into the demonstration where we will spend most of the time looking at allocation setup, and then we'll go into processing. Okay, first in terms of definitions, there are 4 different accounts that come into play in advanced allocations. Let me just go through each one of these briefly. First, we have source accounts, and these are the accounts that typically hold balances that are to be allocated. Most often, source accounts are going to contain a debit balance. And these source accounts can be credited during the allocation process or not. And that depends on how we set up the offset accounts, which we'll talk about next. Offset accounts are the accounts that are credited during allocation processing. Normally they're credited, meaning typically we're allocating debit accounts, so the offset is going to be a credit. An offset account can be the same account as a source account, or it can be a different account. And whether it's the same or different than the source account controls whether or not the source account is affected by the allocations. If you use an offset account that is different than the source account, then you're never actually affecting the source account itself, and that source account remains intact. And this will become very clear when we go through the demonstration later on. Target accounts, these are accounts that are receiving allocation entries, and they're typically debited during the allocation process. And finally, we have base accounts, and base accounts are optional. If you're specifying user-defined percentages for each of your target accounts, then you don't need to have base accounts. If you're not specifying user-defined percentages, then you have to specify base accounts, 1 or more base accounts for each of your target accounts. And these base accounts are going to determine how much is allocated to each of the target accounts. Most often, base accounts are unit accounts, but they don't have to be unit accounts. They can also be standard GP posting accounts. So base accounts give you the ability to allocate based on things like square footages or head count, and they also give you the ability to allocate based on revenues or costs or any other posting accounts. Next, I want to walk through an example that shows how these different accounts come into play. So in this example, we have the goal of allocating rent and supplies out of Department 100 and allocating rent and supplies into Departments 200 and 300 based on Department 200 and 300 headcount. So on the left-hand side of the screen, I'm showing what the balances are before the allocation is run. There is some balance in the rent account, or a balance in the rent account, and there's also a balance in the supplies account. And then you'll notice down towards the bottom that Department 200 and 300 have some unit accounts set up, holding headcount, accounting headcount is 60, and sales headcount is 40. Now shifting focus to the center of the screen, this is a simplification of an allocation definition within our product. On the top, we're defining what the source accounts are that we want to allocate. And for each of those source accounts, we've specified an offset account. So we're telling the system we want to go look at account 16510, find its balance, and credit that amount to the offset account, which is 108,000. And we also want to go look at the balance, find out what the balance is in account 16520, which is supplies in the admin department, and credit that amount to the offset account, which is again 108,000-00. Now down in the bottom middle of the screen, these are the 2 accounts that we want to allocate to, those accounts being 209,000 and account 309,000. And you'll notice that in the allocation definition in the center of the screen, there's no percent defined. Rather, there is a base account defined for each of the targets. So when we're allocating to the first account, 209,000, we want to go look at base account 29020, which is the head count in the accounting department, and get that number. And then likewise, when we're allocating to account 309,000, we want to find out what the head count is in department 300 by looking at account 3009020 here. And what the system is going to do is it's going to add up the total head count, which in this case is 100, and then figure out the percentages that each one of these target accounts should get. In this case, it's pretty simple math. This target account is going to get 60%, which is 60 divided by 100. And this target account is going to get 40%, which is 40 divided by 100. Now, in the top right-hand portion of the screen, this is what the allocation entry will look like after we process it in advanced allocations. So you can see we're getting a credit for $22.53, which is the rent coming out of Department 100. And you'll notice that we're not crediting account 16510, we're crediting account 108,000 instead. That's because we've set up an offset account. And then we can also see a credit out of Department 100 for the supplies in the amount of $2,049. And again, we're crediting account 108,000 instead of the original source account. And then you can see that we have 4 allocation debits coming in, one for each combination of source account and target account. So we can see 2 entries into account 209,000, one for rent and one for supplies. And we can see 2 amounts going into account 309,000. One of those is for rent and one of those is for supplies. And finally, on the bottom of the screen, we can see what the GL balances are after the allocation entry has been posted. Notice that the original accounts for rent and supplies in Department 100 are unchanged. We have a credit in our special allocation out account that we've set up in Department 100. So now Department 100 does net to 0, but we have not affected the original accounts. And then we've debited allocation in both departments 200 and 300. All right, now let's talk about some of the differentiators with the product. First, in advanced allocations, you have the ability to define your source accounts by an unlimited list or a list of unlimited length, or you can define your source accounts by ranges of segments. In standard GP, and this is a big difference, you only have the ability to specify a single account for every allocation that you set up. So this feature in itself can be a tremendous time saver, particularly if you're needing to allocate many accounts at one time. For example, if you're allocating all the accounts in a single cost center or department or program. Next, source accounts can remain intact through the use of offset accounts, which we just went over in a little bit of detail. Standard GP does not support this. We also give you the ability to allocate a portion of accounts. Now, generally, when you are allocating, you're going to go look at a balance in an account, let's say it's rent, and you're going to take 100% of that amount and allocate it to various other accounts. We give you the ability to take a portion of the source account balance, let's say 10%, and then allocate that 10% to a variety of target accounts based on percentages or head counts or however you want to do it. If this is unclear, this will become clearer as we go through the actual demo. Next, allocations can be based on balances in other accounts. They can also be based on budgets, and they can also be based on amounts that exist in Excel. You can have the ability in our product to allocate both year-to-date balances or period amounts, and this can be specified on an allocation by allocation basis. Next, allocations in our product are processed on demand, and typically this means after all the dust is settled on all of the drivers and base accounts and adjustments at month end or period end, then you run out advanced allocations. You can do this in standard allocations, but it does require going through a couple steps and using clearing transactions. Next, we allow you to tier allocations, which means you can have a series of allocations that are in a group, and you can have other groups also set up And subsequent groups can take into account the amounts generated for prior groups. We give you the ability to allocate transaction details for a given employee or vendor. So let's say that you want to allocate legal expenses, but you don't want to allocate everything that's in that legal expense account. Maybe you want to only allocate expenses for a particular attorney or vendor. You have the ability to do that in our product. And likewise, if you're allocating employee expenses, you can specify individual employees that you can allocate. We also allow the presentation of financials with or without the effect of allocations. And this is by using the GP Ledger feature. We give you the ability to preview allocations before they're posted. We support the masking of target accounts, and this allows you to do an account for account allocation very easily, and we'll look at a demonstration of this in just a few minutes. We also support binary stream multi-entity, and the latest version also introduced full intercompany support. All right, so let's actually look at the product now. And in the first part of the demonstration, what I'm going to do is walk you through a very simple allocation setup, one that's based on user-defined percentages. And in our demonstration company, we're using data that's very similar to the standard GP demo data. The general ledger chart of accounts has 3 segments. The first segment is department. The next segment is the main or natural account. And the final segment is the sub-account. And our goal in this demonstration is to allocate all of the accounts in Department 200 over to Departments 200, 300, and 400. So we're going to go into GP, into Financials, and we're going to go into Cards, and then we're going to go into Advanced Allocations. And the first thing we're going to do is set up an allocation ID, and I'm going to call this one Department 200. We'll give it a description. And for this allocation, we're going to allocate period amounts as opposed to year-to-date amounts. And we're not going to talk about tiers right now, so I'm just going to leave tier and sequence set to 0. This allocation is going to be based on fixed percentages. And we're going to post our allocation entry to the base ledger, and I'll talk about base ledgers more in a few minutes. And I'm going to put in a balancing account of all 9s, and this is where any odd rounding entries go as a result of the allocation. And next we're going to specify the source document that gets posted to in the GL. Now these other fields like budget ID and period to date, year to date, base down here, we're going to skip for now. We're going to keep this simple, and we're just going to again focus on setting up a very basic allocation that is based on user percentages. So we've filled out all the data on the header of the screen. Now we need to define the source accounts. And we can do this a number of ways. One way is we can simply start typing in our source accounts and our offset accounts one by one. If you have a lot of accounts that you need to add to this list, that can be very tedious. So we do give you the ability to add accounts automatically using the auto button, which I clicked right here. And now I can use filters and wildcards to automatically fill the source account grid. So what I'm going to do is just type in 200 in my account filter field. And for the rest of the segments, I'm going to type in underscores, which is a wildcard in advanced allocations. And I'm going to leave the account handling option set to add and click the process button. And what that did is it added every single account in Department 200 to my source account grid. And you'll notice that it also automatically populated the offset account as well. And in this case, it populated the offset account with the same account as the source account. I'm going to walk through that process again. I'm going to make one slight change. First thing I'm going to do is delete all the 200 accounts. Now I'm going to add them back, but this time I'm going to specify an offset mask. I'm going to specify an entire account here. Click process. And you'll see this time it did populate the source account grid again, but this time it made all of the offset accounts 208,000. Okay, so that's two ways to populate this source account grid. One is to manually type them in, the other is to use the auto button. Another option is to specify the source accounts by ranges of segments. So I'm going to specify Department 200 again. So I want to grab all my accounts that have Department 200 through Department 200, and from account 5,000 to 9999, and from sub 00 to 99. This has the same exact effect as specifying this list. The difference is that if we add new accounts that fall within this range, we don't have to come back in and modify our allocation setup. If we're using a list and we've added an account to the general ledger chart, we'll need to come into the allocation and add that account to this list as well. That's one of the reasons using ranges of segments is a preferable option than using lists. Also worth noting when you're defining by ranges of segments is you have the ability to specify an unlimited number of ranges of segments, and they can be both includes and excludes. So let me flip this one over to exclude. So now we're saying grab every single account from 5,000 to 9999 in Department 200, and also exclude accounts 6,000 through 6,500. Okay, so that is how you would define the source accounts. Before we leave the source account area, I just want to touch on allocation factor. By default, this is set to 1. If you only wanted to allocate a portion of your source accounts, you can specify whatever portion you want to allocate in the allocation factor window, or field, I should say. Next, we're going to go over to the target area and type in the accounts we want to allocate to. We want to allocate to departments 300, 400, and 500. And I'll just specify some percentages. And we are now done setting up a simple allocation based on user-defined percentages. And just to reiterate this allocation factor, let's say the system goes through and it finds an account in Department 200 that has a balance of 1,000. It's only going to take half of that, $500, and then allocate it to these accounts based on the percentages. I'm just going to go ahead and put this back to 1. And I'm going to go ahead and save it. And we'll recall it. Next, we want to allocate based on square footages that are held in unit accounts. And instead of building a new allocation from scratch, I'm just going to recall it up on the screen. So this is a pretty simple allocation. Again, on the left-hand side of the screen, we've defined all of our source accounts, which happen to be every account in Department 200. And over on the right, we're allocating into Department 300, 400, 500, and 600. You'll notice in the target grid there's no longer a percentage column. That's because we've selected our based on option to be unit and posting accounts. If we change this back to fixed percentages, you'll see the percentage column will come back. Now, instead of defining a percentage for each of our target accounts, we need to specify a base account for each one of the target accounts. For Department 300, we want to specify the base account as being 39010, which is the square footage account in Department 300. And we want to use base account 49010 for Department 400, which is square footages in Department 400, and the same for Department 500. So the first thing we're going to do is we're going to click on a target account, in this case the target account for Department 300, and then click on the Define Base Accounts button on the bottom. And this opens up a window where we can create a list of base accounts for that target account. And right now I just have one target account listed, and that is the square footage account in Department 300. If I go to my target account in Department 400 and click on the base account button, I'll see something very similar, but this time the base account is the square footage account that's in Department 400. And you would see the same thing in Department 500 and 600 as well. Right? So that's the only difference between this and the first allocation that we looked at, is that you do not specify percentages. Instead, for each target, you specify one or more base accounts. And we're going to run all of these allocations later on so you can see the debits and credits. Okay, the next demonstration is it's very similar to the one we just looked at, but instead of having base accounts where we're looking at a single headcount account or square footage account, we're going to use ranges of segments on the base side. So we're going to allocate based on all expenses in each of the target accounts. So I'm going to go to my next allocation in the system called base range, and it looks identical on the front screen. Where the differences lie are on the definition of the base accounts. So if I go to my first base account and I click on the Define Base Accounts button, instead of seeing a list, I am seeing ranges of segments. So for my target account in Department 200, I want the system to look at every account from 5,000 to 9,999 in that same department as a basis for what's being allocated to that account. So now let's look at target account 300, 5100 and its base accounts. So that target account, which is going to receive a debit, a target account being 300, 5100, its debit is going to be determined by the balances in all of the cost accounts, that is accounts 5,000 through 9,999 in Department 300. And Department 400 is defined exactly the same way. So this gives you the ability to very easily base allocations on things like maybe direct payroll costs or revenues or other department costs. Okay, next, I want to talk about how you can allocate individual transactions instead of balances. And the goal here is to allocate transactions in a single account, account 5100, to accounts 100, 6530 in departments 200 and 300. So we have an allocation set up called Detail 2. We've only specified a single source account, which is salaries and wages. And then we're going to allocate the transactions in that account to departments 100, 200, and 300. And the thing that makes this allocation unique is that the details checkbox is marked. And that tells advanced allocations that instead of allocating the period balance, to instead reach inside the source account or source accounts and grab the individual transactions and allocate them to the target accounts. And when those target accounts receive the allocation entries, they will have additional information on them, like the vendor ID or employee ID and the document number. If you are using detailed allocations, we also give you the ability to limit the transactions that are being allocated based on an original master ID, meaning based on a vendor, or an employee ID. So let me bring up a different allocation that's based on details. This one is identical, except in the original master ID, I've typed in an employee ID. That means when this allocation is run, it will only include or take into account transactions that are to that specific employee. Okay, in the next demonstration, I want to walk through a situation where you want to allocate every account in a department to the same account, that is the main account, in other target departments. In this particular example, we're going to allocate all accounts in Department 200 to the same main account, but in different departments. This functionality is known as allocation masking in advanced allocations. Before we look at this on the allocation setup window, I'm going to walk you through a graphic that explains what's going on in the system so it's very clear. So the plan is to allocate all of these accounts in Department 200 to departments 300, 400, 500, and 600 in these percentages. When you do that advanced allocations, what the system is doing behind the scene is it's finding the very first source account, in this case 200/6100, and it's going to allocate it. And that's shown right here in this block of entries. So the first thing it's going to do is it's going to credit the source account with its balance, $1,000, so it's cleared out that account. And then it's going to debit Department 300 for $100, 400 for $150, 500 for $250, based on the percentages below. And when it's hitting those departments, it's getting the main account that it's posting to from the source account. So you can see the source account is 6100 and all the target accounts are also 6100. Then the system is going to go to the next account to allocate, which is account 6110. That's down here. Again, it's going to credit the source account for its balance, and then it's going to debit each of those departments for their proper amount based on the percentage defined. And you'll notice that the main account for the source account entry and the target account entry are the same. And it's going to do that for every single one of the accounts that you have defined to allocate. So let me show you how you do that in advanced allocations. We'll bring up an allocation called mask. On the left-hand side of the screen, the source accounts, this is as you would expect. It's just every single account in Department 200. Now over on the target side, instead of specifying the full account number, we've only specified the department portion. And for the main account and the sub-account, we've put question marks. And that's telling the system that that part of the account should come from whatever source account is being allocated. Now, if you were to do this in regular GP, it looks here I've got maybe 20 or 30 accounts to allocate. You would have to set up 20 or 30 allocation entry screens in GP to accommodate this. And it's just on a single screen in advanced allocations. And we'll look at the entries that are created again. We'll look at these later on. All right, the next scenario is where we want to process some allocations in order or in tiers. And when we process allocations in tiers, any allocations that are part of a subsequent group defined by a sequence number, which we'll look at in a second, affect other allocations or are affected by other allocations. So in this particular instance, what we want to do is we want to allocate all the accounts that exist in Department 200 to just two accounts. We want to push everything to account 350-100 and account 450-100. So let's bring up that allocation. So here we have all accounts in Department 200, and they're being allocated to target 350-100 and target 450-100. And then as a second step, we want to allocate whatever gets posted to this account and this account over to accounts 500, 5100, and 600, 5100. Now before I go to the next allocation setup that shows this, notice on this allocation that we have set a tier sequence to 10. If I go to the next allocation, the one that takes amounts from accounts 300, 5100, and 400, 5100, and allocates them to departments 500 and 600, you'll notice that it has a tier and sequence of 200, or 20, I should say. On the setup side, that's all there is to setting up tiered allocations, just making sure that the allocations have the proper tier or sequence number assigned to them. And more than one allocation can belong to the same tier or sequence number. All right, next is an example where we want to allocate based on values that exist in Excel. And the goal here is to allocate all departments that exist in Department 200 to 2 target accounts. And what gets allocated to those target accounts is based on data that's in Excel. So first I'll click on my top target account, and then I'll click on Define Excel References. And this is telling the system to go look on my hard drive in my Excel folder and find a Excel file called test.xls, find a workbook called budget, and then find the value in A8. And whatever that value is will be the basis for my target account 300, 5100. And notice that I can have more than one Excel reference per target account. And I'll go to my next target, and this is exactly the same except it's looking at the value in cell A7 instead of cell A8. So this allocation will base the allocation to these accounts based on their share of the values in those 2 cells. All right, just a few more things to mention on the allocation maintenance window before we go over to allocation processing. One is that you do have the ability to copy allocations. So if you have a lot of allocations that are very similar, you can bring up an existing allocation and select copy and give it a new name. And the system will copy the allocation and bring the new allocation up on the window. And we can go ahead and just make a couple changes. And you're done setting up another allocation. Next, we give you the ability to print and export allocation definitions. So I'm going to bring up the allocation we set up. And I'm going to switch it to be based on a list because the report will show a little bit more information that way. And I'm going to click the button in the upper right-hand corner. And this is going to show the allocation definition. And we also have the ability to print this and to save this off to Excel or PDF. I'm going to send it to my desktop in an Excel format so you can see what that looks like. And if I can find it, I will show it to you. Here we go. This will give you the ability to audit your setups. We also give you the ability to import allocation definitions. So when you're initially getting started, if you prefer to put all that information in Excel and then import it, you can. You just select Tools from the menu and then Import. You'll select the Excel file from your hard drive, and the system will list the data. You can validate it and then import it in the system. And finally, there is full online help, which is context sensitive on all the screens in advanced allocations, and that's accessed either by using the help menu, by pressing F1, or by clicking the help button in the bottom right hand corner. All right, now we're going to move on to processing. And allocation processing, advanced allocation, is a 3-step process. The 3 steps are create, list, and post. When you press the create button, it calculates all of the allocation entries and stores them in an edit file. so that they can be either listed or posted. When you click the list button, it's going to list all of the allocation entries that were calculated by the system. And post creates a GL journal entry in an unposted state. The process can be done whenever you want. It's typically done at month end, and it can be performed an unlimited number of times per period or per year. If you run your allocations and post them, and you're not using offset accounts, running the allocation again will only allocate incremental amounts that have changed since the last time you ran the process. That's because when you run the allocation initially, it's clearing out the source accounts, and there's nothing to allocate again unless new GL entries have been posted to those source accounts. If you are using offset accounts, the source accounts are never being affected, which means that you can run the allocations over and over, and they will calculate and post the same result subsequent times. So you need to be a little bit careful if you're using offset accounts. I hope that makes sense. Last, I want to mention that when you click the Create button, it creates a single GL batch, and that GL batch may have one entry in it, or it may have many entries in it, depending on how many allocations you've selected to process on the grid. So first, what I want to do is just walk you through the process very quickly. I'm going to select one allocation to process. I'm going to create the entries. I'm then going to list the entries, and we'll spend some time in a few minutes going through the details of this report. But you can see all the debits and credits that are a result of generating allocations. And if everything looks good, you can just click the Post button, and the unposted JE is created automatically in the GL. If you create and list, and you determine that there is something wrong, you simply click the Undo button, post some adjustments, and or modify your allocation setup, and then start the process over. All right, now let me talk about processing in a bit more detail. I'm going to select a number of allocations to process. I think that's all the ones we looked at. And then I'm going to come to the top of the screen and specify the period that I want to allocate. So I want the system to go look at 131 balances to allocate. And then also for any allocations that are based on unit accounts or posting accounts, when it goes and looks at those unit accounts or posting accounts, on the base side, I want you to grab those amounts from the same period as well. We do give you the ability to specify a different period for the base accounts. This is useful for situations where you maybe want to run your allocations preliminarily and you have not yet locked down your base amounts for the current period. Maybe you don't know what your head counts are yet. So you just tell the system to use whatever the amounts were for the prior period. And then later, when everything is settled, you can come back and rerun the allocation and change the base period accordingly. Next, we have posting method. You can either create your allocations in detail or in summary. If you create them in detail, you're going to get a single debit and credit on the target side for every combination of source account and target account, which is great. I mean, you get a lot of detail, and when you're looking at a detailed GL report for accounts that have received allocations, you'll be able to see exactly which source accounts those allocation amounts came from. If you switch to summary, each allocation will only have one debit and credit per unique GL account. This is much, much faster on the processing side in our product, and also it's going to generate allocation entries that are much smaller. For now, I'm going to leave this set to detail. Okay, so I have maybe 5 or 6 allocations selected. I'm just going to click the Create button. And this is telling you that it's going through multiple tiers, because we did have multiple tiers set up. And the system is done calculating the entries. Now we'll go into List and bring the Edit List up on the window. I'm just going to change the way this looks so it's a little bit clearer. Make it easier for you all to see. So we're looking at our very first allocation entry, which was for the allocation called Base. And you can see that there's debits and credits, and that some of the line items are gray and some are blue. All the gray entries are the credits or allocations out of the source account or offset account, and all of the darker lines are the debits, typically, or entries that go to target accounts. Now when you go down to the target accounts, let me switch the view again and make it a little bit bigger. You'll notice that you can expand the target entries to get more information about how the system calculated the debit amount. Since this particular allocation was not based on user percentages and was based on balances in square footages, I can see when I expand that debit how the system calculated the $2,026. For this particular target account, the square footage was 35,000. All square footages were 900,000, so it takes a ratio of those two numbers, and then it multiplies it times the source account that's being allocated. In this account, the source account, the single source account that it was allocated, had a balance of $5,210, and it multiplies this out and it gives you the amount. And you can see that for all of the target accounts. Let me scroll down to another allocation. This one is base range. This allocation was based on all of the P&L accounts in each of the target departments. So again, if I expand one of the target rows, you'll see the information here related to how it comes up with the debit amount. Here it's telling me that all of the base accounts for this particular account, this particular target, were $63,000 and some change, and the total of all base accounts for that allocation was a little bit over $1 million. And the source account amount is $5,210. And when I multiply the amount of the source account times the ratio, I come up with the amount of $301. Now in this case, you may want to see more information about these amounts. And where does this $63,000 come from? And you can see by coming back to the allocation processing screen and selecting the Include Base Balances List option. And when I do that, I'll see 2 reports instead of 1, and I'll just arrange these on the screen. Make this a little bit bigger. And I'm going to scroll down again to my allocation entries for the allocation called Base Range. And again, I'm going to come down to one of my target rows. Stretch this out a little bit more. There we go. And again, we can see this $63,000 was the total amount of the base accounts for this target. And over on the right, we have our base balances list. And right now it's showing the base balances list for a different allocation, an allocation called Base. We want to see the same report, but for the one called Base Range. So for my allocation called Base Range, we had a target of, one of the targets was $250,100. And the base accounts were all the P&L accounts in Department 200, and here they are listed. And here is the balance in each one of those base accounts. And here is the total of all the base accounts for that target. And that is the same number you see here. So if you're in a situation where you want to see more information, a better audit trail related to how the system is calculating the debits that are going into target accounts, particularly for allocations that are based on ranges, you simply need to select the Include Base Balances list. Okay, now these reports, the edit list, are also exportable, just like the allocation maintenance listing was. So I'll push this out to Excel, and we'll take a quick look at that. And this is a really nice format. Oops, I grabbed the wrong one. You can see there's multiple tabs, and each one of these tabs is the allocation edit list for an individual allocation. And the Excel file that's exported retains the same drill down capability, so you can see how the amounts are being calculated. Next, I want to go ahead and post these entries and then look at a couple of the entries within GP. So back to my window, I've created a batch that has probably 6 or 7 entries in it. I've listed them more than once, and now I'm ready to post. Now those entries have been posted. So I'm going to go into the General Ledger Journal Entry screen and set my sort to Journal Entry and go to the very last entry. Okay, so here is the last entry, and this was from Allocation Tier 2. You can see the debits and credits. And on my debits, as I mentioned earlier, you get a full audit trail. So for this particular debit to account 500-5100, it's getting a line item reference of from account 400-5100. Scroll through a couple more of these. Here's the one that we put 2 together. And again, you can see all of the debits have the full audit trail information. I mentioned this earlier that the allocation entries are created in an unposted state. So if you discover there's a problem with the allocation downstream, you still have the ability to correct it. You can delete it if you want and rerun the allocations. All right, that concludes our demonstration of advanced allocations. If you'd like more information, you can visit our website, or you can email me directly, and that contact information is shown here. Again, thank you for your interest in advanced allocations.